It's interesting, you think about how this event was 5-10 years ago. It was about one big product. And Here they are announcing a slew of new initiatives. Let's start with the iPhone first, though, because this is still primarily a hardware company. The iPhone
absolutely.
11.
Yeah, you have, I think, 900 million active devices right now, which is just a crazy number when you think about the world population. But I think, let's be real, we're all waiting for 5G in 2020, so I think it's a bit of window dressing this year. I don't think people are that excited about the iPhone today just because we know what's coming next year. So I think it's just not as exciting as some of the ones in the past where we saw some real innovation with the phone.
So we looked to this event for the new hardware, but one of the things that's actually moving the market today is the Apple TV Plus pricing that's come out, $4.99. We saw initially Netflix and Disney under pressure on the back of that announcement. What do you make of that, and what does this mean for the other streaming services?
Yeah, I'd be very nervous on Netflix, who just raised their pricing a couple months back, and Disney Plus obviously is very competitive here too. So it also says that a lot of these costs are going to start coming down as more players come into the space. So when you start looking at Netflix and that outrageous valuation, you have to start to get nervous because Apple's going to be a real player, and if they're going to undercut pricing like that, that's a big deal for them positively.
Is there an argument to be made, though, if it's $4.99, you can just kind of add it on to your Netflix? If you've got two services that are $15 each, let's say, maybe it makes you think a bit more about which streaming service you subscribe to.
It's a fair point, but also you have to look at, Netflix actually lost subscribers when they raised the price. Last quarter when they came out of earnings, they actually lost users, which was the first time ever. So I don't know, it's a little bit more of a problem than we're just going to add this service on because it's starting to get expensive to have all these services.
Okay, it sounds like we've got some sound from the actual unveil, the event over in Cupertino. Tim Cook speaking a short time ago. Let's take a listen.
iPhone and the incredible capabilities that it puts into people's hands has changed the way we live our lives in ways that we never could have imagined. It's become so essential for hundreds and hundreds of millions of people all over the world. It's changed industries and led to the creation of entirely new ones, and it's made a profound impact on all of our daily lives.
So, Tim Cook, not saying a whole lot about the direction of the iPhone on that front. I'm looking at the stock move right now. It is slightly just in the red, down about 0.1% there. How do you think investors actually value this company? Is it still a hardware company? Is it an evolving services company? How should we be looking at it?
Yeah, I think it's more the latter. I think it's becoming more of a services company, which goes more into the value camp, right? At this point, we have a lot of people using iPhones. Now it's about what other services in their ecosystem they can sell, which makes their earnings more consistent, but it's not about blowing the numbers out with new technology. That kind of died with Steve Jobs in a way. With Tim Cook, it's more about, I think, maintaining the brand. And I think from that perspective, Warren Buffett owns Apple now. It's a value stock. It's not a growth stock anymore.
Okay, let's talk about another company that is thinking of coming to market, and that's WeWork, under a lot of scrutiny. Today we got those reports that SoftBank potentially asking WeWork to delay the IPO, and then we got the report saying, look, WeWork's still going to continue on with its roadshow next week. There's a lot of questions about what the valuation is going to be for this company. Is this a WeWork-specific story, or does this say something about where tech is and maybe investors getting a bit wary about these companies who have very inflated valuations on the private side coming to market and not necessarily performing in that way?
Yeah, I agree with you there. I think the bottom line is it starts to say like these IPOs, these billion-dollar IPOs, you look at Lyft, you look at Uber, they haven't done very well. And now you're seeing a valuation that can be cut more than half based on the last valuation, which was over $60 billion. When you look at what Goldman had it valued at like less than a year ago, I think it also just speaks to like, hey, if you're going to buy some of these IPOs, you got to be really careful here. The prices have probably been a bit inflated.
And how much of this has to just do with the market environment right now?
Well, I mean, the market environment's been very good for IPOs, and WeWork's still having problems. That's a really bad sign for WeWork, I would argue, because if you're going to have an IPO, this has been the time to do it. I mean, we've had a lot of IPOs that have done really well. Beyond Meat, up over 500%. Pinterest, so there's numerous ones that have done great. And the fact that they're not doing great in this environment, I think that's a very bad sign.
Okay, Ryan Payne, always good to have you in studio.
Thank you.